I want to share a little bit of framework around if we're in a bear market, and let's just call it a bear market. What does that really mean? And what's the context of that? So here's some of the history. The history is bear markets tend to be short-lived in the long-term scale of things. The average length of a bear market is around 9 or 10 months. The average length of a bull market, okay, is around almost 3 years. Okay. If you look at just historical perspective, if the bear market started in January, historically, by September, October, we're probably around through it. Now, again, it could be longer than that, could be shorter than that. But I think it's important to have a good historical framework and remember that this is going to be short term. Okay, history tells us that we do believe this is a short term in the grand scheme of a long-term investment cycle. The second thing, bear markets do not automatically mean recession. So there have been 26 bear markets since 1929, but only 15 recessions during that time. So a little more than half the time, a bear market has also meant recession. Okay. Now, recession is not the end of the world either, by the way. They come in different flavors. A recession is technically just 2 consecutive quarters of a contraction of GDP. So you could have a GDP of negative 0.5 and negative 0.8, and technically it's a recession. It doesn't mean it has to be nasty. Okay. Third, and this is something I think that's important, especially for long-term investors, because remember, investing is a tool that we're using for a purpose. A lot of you, the purpose is retirement. So assuming a 50-year investment horizon, you can expect to live through about 14 bear markets. Okay? So keep that in mind. If you start investing at 30 and you invest till you're 80, which is pretty common, you're going to go through 14, 15, you're going to go through these, okay? And it's not something to be incredibly fearful about. Now, they always look and feel differently. They're never identical. There's always new, different concerns, okay? Sometimes it's geopolitical, sometimes it's tax policy, sometimes it's, a health, COVID-19, whatever it is. They all look differently. But in the end, if you believe that economic growth will continue over the long term, then we will recover. And that's our base case. And lastly, bear markets obviously can be painful, but of the last 92 years, bear markets have comprised only about 20 of those years. So in other words, 78% of the time in your investing time frame, you're going to be in a bull market, not a bear market. 22% of the time, you're going to live through a bear market.